All right, this is the final segment, and it's an important one, so we're glad you tuned in here on Lowcountry Money Talk, where we've been really unpacking what's going on in the economy and how that affects your portfolio. We're going to talk to Phil here as we sort of wrap up the show on some other options and what to do with the rest of our money. Phil, we've really focused a lot on the market, and we're glad you've been able to help us with that. Let's talk a little bit, though, about, we're seeing our investments taking a hit. We want to know if there are some safer options, and are we overexposed for our age?
Okay. If you can't sleep at night, maybe so.
Maybe, well.
But, we always, Jessa, our followers here, the people who watch this so regularly, they always hear us talk about the rule of 100. You take your age, you subtract from 100. Really, that's all I like to see, the exposure to equities.
Right.
So if I'm, as a rule, and I work mainly with retirees.
Right.
So, that's kind of where I'm focused. If you're younger and you're still working and you're contributing to 401k and you have your dollar cost averaging, you just keep on keeping on. But if you're retired or soon to be retired, you've kind of accumulated all your wealth here over the years of the dollar cost averaging, and you're going to take a big 30% hit or something like that. It's going to sting.
It stings.
At retirement.
Right,
so the one thing, we can't control what the market is doing, but we can control how much exposure we have to the market.
So explain, briefly the rule of 100.
Yeah.
And obviously the goal being that if you're older, you want to be more protected.
Right.
And then walk us through some maybe options we should be taking a look at or working with you or our financial advisor on.
All right. So for the last 12 or 13 years, people scoff at the rule of 100. They're like, oh, the market's great. Why would I just want to have that much into it? It's almost like, Noah out there preaching about the rain and you need to get in the ark, for 40 years or whatever. So the thing being is the rule of 100 limits your exposure to equities. So, and you could be stocks, mutual funds, whatever your equity portion is, things that can lose value. So if you follow that, you're probably feeling pretty good right about now, because, if you think about it, let's say I have $1 million and only 300 is exposed to the market. So of that 300, if I was down 20%, that's 60 grand on $1 million. Still don't like it, but it's only 6% of the overall holdings.
Yes.
And then I can take income from the other portion while the equity portion is healing, because we don't want to sell low. Right? We want to buy low, and the good news is that opportunity is closer today than it was yesterday.
That's a very good point that you
Now,
make.
it still may be a long way off, but it is closer today than it was yesterday, and the day will come.
Right.
So when I'm telling people, hey, go ahead and get things ready now, I'm preparing you for what's ahead. The market is a leading indicator. It's in the rear view mirror what's going on. The market's already ahead of that. So if we can position now for what we're one day closer for, even though we may have still turbulent times ahead of us, boy, when we hit the gas pedal, we're ready to go. Yeah. If we're not, if we have our head in the sand and we're ignoring stuff and this and that, we're just kind of doing the same old. We're not going to be ready for the next uptick.
Right.
So the great thing that I like to tell people, to keep it on a positive note, is that once we get done with the bear, we have this nice bull ahead of us where we can get in there and take. Here's the sad part. Many people get gun shy.
Yeah, because of getting stuck
and
in
they
this
never
market.
go back in. And it's like, no.
Yeah.
The rule of 100 says 30, in my example, 30% in equities.
Right.
And you're like, well, I want 0 in equities because the market just got blown out. I'm like, well, that's not going to work either, because you're living longer. You got to have the growth that the market will bring. You got to get into some of that.
Right. That's what I like about how you operate, Phil, is you really have these strategies that keep the emotion out of it and help us to navigate ups, downs, and where we are in life, and to your point, whether or not we can sleep at night.
Yeah.
So it's good stuff. Phil Bloyd, of course, with Revolutionary Financial Group. If you do think you might want to just have someone take a deep dive, look at that portfolio, see where you are risk-wise. Of course, you can call the office and get in touch with Rachel. A good client for Phil is $500,000 or more in equity. So
Yes.
thanks so much
All right.
for walking us through all
Yeah.
this, Phil. And thank
Enjoyed
you
it.
for watching. We'll see you next time on Lowcountry Money Talk.